Bitcoin just hit a breaking point. And no, I'm not talking about the price. I'm talking about something way bigger than the price. And it's actually not a lot of people in the home mining space are actually talking about this. The biggest mining companies in the world are literally giving up on Bitcoin for AI, believe it or not. Core Scientific just got bought for $9 billion to become an AI data center. Mara just posted a $1.2 billion loss. Public miners sold more Bitcoin in Q1 of 2026 than they did the entire last year combined. So here's the question. If the big guys are running for the exits, what does that mean for us, the home miner? Stick around because the answer might actually surprise you. All right, so let me break it down for you guys. What we're seeing right now is called the Great AI Pivot, and it's real. So Core Scientific, one of the biggest publicly traded Bitcoin miners in the US, just announced they're being acquired by CoreWeave. That's an AI cloud company in a $9 billion stock deal. $9 billion. And they're not the only ones. Iron pivoting from two AI data centers. Hut 8, same thing. These companies are taking their massive infrastructures. We're talking hundreds of megawatts, land, substations, the whole deal. And they're repurposing it all for AI computing instead of Bitcoin mining. And here's the number that got me. Public miners sold over 32,000 Bitcoin in Q1 of 2026. That's more than was sold in all of 2025. Think about that. They're liquidating their reserves just to stay alive because mining profitability has gotten so bad. So why is this happening? Why are these massive operations just giving up? Well, it comes down to one word: hash price. What is hash price? That's how much revenue you earn per petahash per day. It collapsed to around $33 to $38 per petahash per day in Q1 of this year. For a lot of these big operations, that is basically break even. So we're mining below break even. Meanwhile, AI companies like CoreWeave are coming in and saying, so hey, we'll pay you a premium rate to host our AI servers in your data centers. For these miners, it's not even a hard choice. AI hosting pays more than Bitcoin mining right now. So they're all pivoting. And then the numbers back this up. Mining difficulty actually dropped from its all-time high of 135 trillion back in January down to about 132 trillion. That means miners are turning off their machines. The network is losing hash rate because it's not profitable enough for the big guys anymore. Okay, so here's where it gets interesting. And this is the part that most people are missing, right? When the big industrial miners shut down and pivot to AI, they take their hash rate with them. That means less competition on the Bitcoin network. Less hash rate means the home miner actually has a better chance of solving a block. Your odds go up. Think about how many solo blocks were just mined here recently with these little itty bitty solo miners, right? I've used solochance.org before to show you guys the solo mining math, right? And the numbers shift based on the total network hash rate that's out there. When industrial miners leave, the difficulty adjusts down. And suddenly your BitX Gammas and all your little solo miners or your S19s, they're competing against less machines. Well, what is that like? It's like a bunch of the fastest runners leaving the field and quitting the race. Your odds of placing go up, right? Same thing with what's going on right now in crypto mining. And this is especially relevant if you're running at the highest electricity rates like I am here in New York. We're paying about 22 cents per kilowatt hour right now. During the summer months coming up here in the next couple weeks, they're gonna go up. The industrial miners who were profitable at 3 cents per kilowatt hour are the ones feeling the squeeze first. But for home miners who are doing it as a long-term Bitcoin accumulation strategy, as like a lottery ticket or an automated automated DCA or dollar cost average, the math actually gets a little better when these big guys leave. Now there's another angle here that I think is super relevant, and that's DPIN, decentralized physical infrastructure networks. We've talked about this before on the channel. While the big miners are pivoting to a centralized AI data center, there's this whole emerging world of decentralization infrastructure where regular people can contribute to compute power and earn crypto rewards. Think about it. The same infrastructures that made these big miners valuable, the power, the cooling, the compute, it's all being decentralized through DPIN. Instead of one massive company pivoting to AI, what if thousands of smaller operators could contribute to decentralized AI compute and get paid for it? That's the DPIN thesis. And I think we're going to see more and more home miners explore this as a way to earn while they mine. I've been covering this space with 375 AI, WatchX, and others. And I generally think DPIN is going to be a huge part of the mining conversation going forward. It's like instead of choosing between Bitcoin mining or AI compute, why not both? Your hardware, your power, your way, right? Now, before I get into what I think you should actually do with this information real quick, if you're finding this helpful, do me a favor and hit that like button. It really helps the channel and lets me know you want more like this. Subscribe if you haven't already, because I'm going to do a lot more coverage on the AI pivot and what it means for home miners. Okay, so let's get practical. What does this mean for you if you're mining at home right now or thinking about getting into it? Here are my 3 takeaways. Number 1, don't panic. This is when people panic and they run away, but don't panic. Big miners leaving is actually a net positive for us as home miners in terms of difficulty and our odds. If you don't believe me, go look up how many solo blocks have actually been mined by small miners here since January, since the beginning of the year. The Bitcoin network is designed to adjust. Miners leaving means the pie gets split amongst fewer people. If you're in this for the long haul, it's not time to quit. Number 2, think about efficiency. If you're running older hardware at higher electricity rates like I am here in New York, you need to be honest about your costs. I've been testing the NerdAxe, I've been testing the BitAxe miners. I even got that new solo 50 terahash miner from eBay. They're not going to make me rich, especially at 22 cents per kilowatt hour. You do the math, it works out a lot better than running a hungry ASIC though. So I'm fine with doing that. Number 3, diversify your mining income. This is where the DPIN comes in, right? Look at projects where your hardware or your compute can earn multiple streams. I've been using salad.com for GPU mining and AI workloads. I'm using 375 AI on my phone to do physical graphing of the roads around me. Using my WatchX to graph other aspects. It also does, if I'm out on a hike or jogging, it does also pick all that stuff up as well. These are great opportunities. The future of home mining is not just Bitcoin. It might be contributing to multiple networks and earning from all of them. So what's the bigger picture here? Look, I want to be real with you guys. The crypto mining industry is going through a massive transformation right now. The era of just plugging in an ASIC and printing money, that's been over for a while. Realistically, since Ethereum switched from proof of work to proof of stake. But I genuinely believe that home mining and solo mining have a future. It just looks different than it did 3 years ago. The big industrial players may be pivoting to AI, but Bitcoin's difficulty adjustment means network always rebalances itself. And for those of us who mine Bitcoin or other currencies, because we believe in the technology, because we want to participate in the network, because we see it as a long-term bet on Bitcoin, the math is always getting a little more interesting, not less. The question is not whether mining is dying. The question is who's going to be left standing when the dust settles. And I think the little guys, the home miners, the solo miners, the deep pin operators might actually be in a better position than anyone expects. All right, everyone. So that's my take on the Bitcoin mining AI pivot and what it means for us home miners. I want to know, what do you guys think? Do you see the big farms leaving as a good thing for us home miners? Let me know down in the comments below. I read every one of your guys' comments. I'm genuinely interested to see what you guys are thinking. If you guys are interested in any of the hardware any hardware or any of the D-pin stuff that I've talked about in this video, I have descriptions down below as well. Use the referral link, use the discount code, save you guys a couple bucks. It helps the channel out tremendously because I get a little bit of a kickback, not much, but it does help. If you guys are interested in actually using any of the crypto platforms or the Tangent wallet, I got links as well. You'd get rewarded in crypto, so would I. So please go ahead and use those links. Like, comment, share, subscribe, turn the bell notification on, set the bell to all. I'll see you guys in the next video. Peace out. Have a great rest of your day.